Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is Finding This Week's Opportunities. On this live stream, we're going to go through what we think is going to happen this week. We're going to go through the key events that are lined up for the next 5 days. Also, we're going to do some trade follow-ups, and we're going to talk about the news of the day, which, guess what? It's tariffs, tariffs, tariffs. We do have a couple trade ideas that we need to go over as well, but I want to welcome everybody back to How to Trade. It's been a fun month. I think there's been more opportunities this month than even back in January, which was a pretty darn good trading month. So I want to welcome everybody back. A lot of new viewers. We saw a lot of you tuned in for last Friday's workshop on the 9 EMA and the 920. We're going to go over an opening range breakout that's setting up right now on the US 30. We're also going to talk about some 920s. I got a 920 play that's developing in Tesla that might actually be a pretty darn good investment buy. I had a great question that was launched at me on YouTube yesterday, and the question was, will the 920 work, say, on a daily or a weekly? And I'd say, yeah, it will, and I'm going to show you exactly how that works. Jeffy, good to see you. Welcome. I'm glad everybody's back and ready to roll. I think it's going to be a fun stream. I think we're going to have a little bit of what I would call unfettered price action this week. Last week was tough. Last week was tough because you had the BOJ, the Fed, the S&B, and the BOE all getting involved, making their interest rate statements. And what that did was that just shook up, they shook the markets up from top to bottom. And now we've got what I call unfettered price action. We don't have any big events this week. We've got PC price index on Friday. Typically, that's a nothing burger. That turns out to be something that we talk a lot about. Oh, PC, inflation, and then nothing happens. So that's going to be our headliner this week. As far as CB, consumer confidence, tomorrow, we're going to go over these things in short order. But right now, I want to go ahead and line up an orb trade. Now, this has been one of our more popular videos that we've released on our Forex what is it? How to Trade Calm YouTube channel. Sorry, we got Forex Signals TV as well, but we've got How to Trade Calm on YouTube. If you haven't checked the channel out, check it out. But because this orb strategy, this opening range breakout's one of our biggest videos that we've ever released, and I get more questions on the orb than anything. So I'm going to set up an orb trade for you, and you'll notice that we're sort of combining it with the 920 EMA. Now, right now, you haven't had a crossover in the 920 just yet, at least not on the 15-minute chart. You can see where we opened. We had this big robust move last Friday, and then you had sort of the gap up, and this gap up is definitely based, well, it's not really a gap, but it's definitely a void. There's a void there, and what happened was there was no sellers here to open the market. The institutions opened the US 30 a little bit higher than usual, and there's a lot of reasons for that. One of them is rollover. Okay, the futures contracts rolled over. The E-mini Dow rolled over. The E-mini NASDAQ and the E-mini S&P 500 all rolled over. That's huge. They rolled over to the June contract, and what that did was that made your pricing, your derivatives pricing, a little bit higher. Those deferred month equities index contracts are still trading at a premium over the current month. That is one thing that you don't see. Typically, we build on what's called backwardation, meaning those deferred month contracts are worth less. Well, they're worth more right now. They're being priced at a premium because there's a lot of confidence in this market, even though it really has sold off quite a bit. Boy, I'll tell you what, we're up 479 right now, and it feels to me like it's sort of building into a trend day here for the E-mini Dow. But this is pretty good stuff here, and I like this. Now, I get asked the question a lot about opening range breakouts. I've had people do it on 1-minute charts, 5-minute charts, whatever, really. And I recommend, if you're serious about it, I love the 30-minute. I think the 30-minute, the first hour of trade after that U.S. Open at 9:30 a.m. Eastern, that first hour, 2 30-minute bars, that gives you really a great range to work with. It really does. But I know a lot of us are not that patient. We don't want to sit there and wait for that first hour to set up, which that's a nasty habit. You got to get over that. But 15-minute chart, you can make a 15-minute chart sing for you as well. So right here, this is a good look at what we've got right there. There's your pre-open. There's your opening bell, ding, ding. A lot of volume in the market. And then you saw a little bit of a move to the top side and then a retracement down really towards our 9 EMA there. So I'm watching this closely. Your orb trade right now is very simple. Do I want to be long or short? You probably want to be long. But we've got to get the proper conditions. We've got to get a close up here, and then we can go ahead and take our trade. Now, would I mind going short on this orb? And the answer is no. Now, remember our entry parameters. Once we break up out of that orb, if this bar breaks out of this range, I highly recommend drawing the box. Matter of fact, we're going to do some coding where we're going to be drawing these boxes, and then we're going to automate that so it's easy and it's done for you. But right here, we're looking for a close outside above that box, and we're looking to go long. Now listen, we'll take a close below this box too, and we'll sell and we'll go short. So right here, our basic premise is this. The market's not staying here. We're either going to get a rally or a sell-off. Personally, these markets have been very heavy. So if in fact I see this 9 cross under the 20 and give us a sell signal and we get our parameters met, I have no problem going short. Here. Matter of fact, I probably would like that better than trying to go long here and really extend the gains that developed mostly on our opening gap up. A lot going on here, guys. A lot going on. But if you get good trade in the orbs, it can be a fantastic strategy. So remember, your first step is identify the open. We really focused on that equities index products because that is, I mean, honestly, that's where the money is, at least if you're trading the U.S. session. And right now, it's time to be trading these on the orbs. Tomorrow, I haven't heard back from my video editor, but I'm sure I'll hear from him later today. It's going to be a very interesting video that we're slated to put it out tomorrow, and it's going to be on the Forex orb. And I'm going to give you 2 strategies on how to trade the Forex orb, and we line them out and show you how to trade it. So I got a lot of requests for that video, so we built it, and I think you guys are really going to enjoy it. So I wanted to start off with a trade setup that maybe we can execute during this live stream. We've got about another half hour or so here. I would love to see this setup, but right now, that's your opening range, 30-minute chart, lots going on. Heyman, good to see you. Heyman, welcome. Let me see. Hey, and Shane, what are your thoughts on trading agricultural commodities, especially coffee? I'll tell you what, Hayne, if you show up to trade coffee, you better be ready. I'll tell you some stories about coffee towards the end of the stream, but one of my first partners, he talked about the pit days, and this was a millionaire pit trader, really. No lie. Everybody on YouTube sits around and they say, oh, I knew a millionaire. No, I really did. My uncle came up. He was an upstairs trader. The guys that worked for him in the pits, those guys all walked away. They'd cash in $100,000 in January. They'd walk away with $1 million at the end of the year. That was the business. That was the game. And he told me about the coffee pits. He said, man, I mean, we felt like suicide jockeys trading coffee. Now, the reason why is because there wasn't as much liquidity. Means those big sweeps would come in, Goldman & Sachs would come in and sell coffee, and the thing would just crash. So you can find opportunities there. I actually used to do live streams on agricultural commodities. I sort of live in an ag land. I live in a small town here in Montana. A lot of agriculture here, cattle, not so many hogs, but sheep, pork. Not like I said, not necessarily hogs, but there are some hogs here. You go to the Midwest to find the hogs, but lots of cattle, lots of crops, lots of wheat here. So there's definitely those are great markets, but you've got to be sharp. You've got to know when the reports come out, what to expect, and understand the geopolitics of the situation. Good question, Hein. There's a lot there, but if you're going to trade coffee, you better know your fundamentals. Ag trading, fundamental trading. It really is. All right, guys, let's go ahead and get started here with sort of our talk today. This is a trade follow-up. I want to start off with this because it was a dandy. U.S. oil, we had this U.S. oil trade right here. Weekly chart, our sell was 89, and it depended on your broker, whether you got it or not. And this is one of those that right now you're seeing the heat on it. We're at 68.90, 68.89 right now, but last Friday we went up to 68.88. And that was just through this broker, through this CFD product. So if you were in fact looking to sell and you got in on that short last Friday, you made a lot of money. It was an easy 50 pips. It was not hard. Now this level's under pressure right now. 69.04. I still expect sellers to step in and dominate the action from this area. But what I will say is the pressure's on. You've got a new week of trade. I'm sort of doing some work right now for a newsletter, and we're really watching crude oil closely because we're waiting to see the impact of the Trump policies on energy and to see exactly if that WTI crude, especially that U.S. crude supply, is kicking on. So I want to go over this because it's very important what happened last week. You can see right there, that was our short. 69 was our level, and I had a 68.89 sell on, and you can see the high right there was 68.88. Now, you probably could have got that depending on your broker, but if you were using this exact broker, you probably didn't get filled. But remember, those spreads, odds are they ate your order up and you got filled there. So a lot going on with CFD products. I can pull the front month WTI contract right now, but I kind of love 69 as a sell. So, I mean, if we were going to be serious about this right here, let's go to WTI. This is your front month WTI futures contract. This is one that I'm targeting. And you can see right here, what do you have? You got a little bit different Fibonacci sequence because this spike high didn't develop like the U.S. oil. So if I'm trading this, I'm going to have different numbers, and that's okay. There's nothing wrong with that. The market structure is relatively similar. But this one right here is going to be looking at about a 69.34. And if, in fact, you're dug in front of 69, I think you'd probably be in pretty good shape. You're just going to have a little more patience. But if you're trading futures, you probably want to be selling right up there around 69.25. That's what I'm looking at, 69.24s, maybe 69.20s, and look to get in on that high-impact short. But now, if you're trading U.S. oil, remember, U.S. oil is priced like a continuation contract. That means that the prices are going to be a little bit different than the futures. So right here in U.S. oil, we're expecting some sellers to step in from 69. So let's go ahead. Let's go to our trading panel right here. I don't know what any of that means. Let's go ahead here. We're up, we're locked and loaded. And if I wanted to trade this right now, let's go ahead and sell the market. Now, if we just sold the market, what did we get in on? A 68.94. Now, we're going to watch this closely as this stream develops, and we're going to see exactly what happens at 38%. But 69.04, I really love those 38%, but it's not as good. It's not as good as it was, and I'm going to tell you why. We tested this zone. We tested it, and now our last week's high, we've broken above last week's high. In a lot of times, once these levels get tested a few times, they lose their efficacy. And once they lose their efficacy, the price breaks, and it doesn't break a little bit, it breaks a lot of bit. So right now, I'm not necessarily scared of holding shorts from 69, but we're going to watch and see how this develops. Very early in the week, we've only been trading crude oil with any real volume for about the last 70 minutes, 71 minutes. So I'm interested in seeing how this pans out. This trade right here would not shock me if we rallied up to, say, 69.50, something like that, and then came back down. I'm still bearish WTI crude. I'm still bearish, but this is definitely a challenge. You had a nice compression there in U.S. oil, nice break out of that compression, and now we're sort of rallying. So I'm interested. This game will be played at 69. If 69 does break as topside resistance, then we're going higher. No question about it. But there's some sellers up there. Let's go down to a shorter time frame and see exactly what's developing as we sort of speak here. And you'll notice I don't have anything up there. I don't have any. This is just price action. Interesting, isn't it? I love that on a 5-minute. You're getting a hammer, an inverted hammer formation. I love that. That's typically a signal that we're going to get a bit of a reversal, but it has to set up yet, and we've got a little bit of ways to go there. So I wanted to cover WTI crude oil. Amazing. Yeah, absolutely. You're welcome. Let me see. Hey, me, was the Dow Jones Industrial Average headed to 43K? Yeah, it's kind of tough. I mean, that's sort of a tough call. There's so much going on in the news cycle with the tariffs and things. Well, we're going to look at that one here in another 5 minutes. I want to see where our US 30 orb trades at, if it's developed yet. But we're going to look at that here shortly. And this is starting to look pretty good to me. This is starting to look pretty darn good to me. We've got that hammer formation setting up. Now we've got a bit of a sell-off. What would I be looking for? I want a retracement. I want to see maybe a print, maybe go down there and print 68.50, something like that. That makes this trade worthwhile. Right now we're in the green barely. And remember, these are demo dollars. I don't even know the leverage on that CFD product. I really don't. I'll have to look into it and build it out. All right, guys, we got a couple other things that we need to go over here today. Remember, if you want to trade any of these things, gold, crude oil, currency pairs, whatever you'd like to trade, Switch Markets is the ticket. Check it out. Double your deposit, 100% credit bonus, tight spreads, low commissions. They've got all sorts of things, all sorts of features. They've got contests going on right now. There's a new contest out. So if you're interested in getting in on the contests or really boosting your purchasing power, your capital efficiency, head on over to Switch and they'll get you up and rolling with something else that can get you into the market with a little bit of strength. Remember, this game's all about money. There's no question. I mean, if you don't have the money to trade, you're already behind the 8 ball. And so I always recommend that anything that can help your purchasing power, be it enhanced leverage or bonuses, you got to check it out. Even prop firms. Even a prop firm can definitely help you. All right, trade follow-up number 2, Fibonacci support level on deck for the gold, for the XAU USD. Now, this is one of those markets that we've been hitting relentlessly. We've been trading a lot of gold, whether it's scalping after key events, whether it's the sell up there, the preemptive scalp from 3,000. This was beautiful. To me, this was really a high-impact trade and one of those that, honestly, if you got 2 or 3 of those trades a year, I guess I'd get over to my charts. If you get 2 or 3 of those trades a year, you got a chance. We had that high-impact sell in front of 3,000, and it really was fantastic. But since then, we've really broken above 3,000, and then you remember this trade right here where we went back down to 3,000. We bought it. Well, the trade idea here is relatively simple. That's not that hard. We're looking to buy 38%, 29.80, 9.81. That's going to be our bid. That's sort of what I would say for a weekly opportunity. If we did, in fact, get a chance to bid down there at 38%, I think we got to do it. So if we do get a chance, to take it, you definitely could get involved there and potentially make a few bucks. So that's down to 29.89. Remember, our trade idea is all set up, and we're looking for about $7 on that trade. So we're watching. We're watching closely. remember, Monday is sort of a day where we cover all of our bases, where we get into our strategy. Our Monday psychology is we want to trade to the green. We want to take money where it's appropriate, and we want to make sure that we do not go into a hole. It's very important. We trade to the positive, don't go into a hole, and game plan for the week ahead. That's what Mondays are all about for me. Just generate momentum. Let's get it going. On Fridays, we preserve the momentum, and on Mondays, we get it started. And the way we can do that is really spot out our high-impact, high-probability trades for the week. And also on our intraday scalps, we can look potentially maybe to take a little bit less profit target than we would have. Let's get back to, let's see, we had a good question from Amy there. Is Dow Jones headed to 43,000? Well, I can tell you right now, you've got your opening range breakout strategy. Are you long yet? No. Why aren't you long? You said, Shane, it broke out. You got to close. That trigger bar, that signal bar has to close above your range or else you're going to get nailed. And one of the things that the reason why we have that parameter on this trade is because oftentimes you see this. You see the price will poke its head up out of the range and then you'll get hit. And right now you're looking potentially to get in. So if we get a nice bar, a move here, then we're going to look to take this thing. Then we're going to look to take this trade. And to answer your question, is it going to 43,000? Well, I don't know that it ticks higher by another 500 points today. I think to walk away up 1,000 points would be a major development in the market. But what I would be watching for is maybe a 750, maybe something like that, maybe a 600, and we'll go ahead and build this trade as it sets up. But it looks like we may get a chance here in the next 13 minutes to pull the trigger on this orb. So we definitely want to keep an eye out for that. Now, as far as another one of our opportunities, we got to understand the impact our economic calendar has on our trade setups and different things, and what the news cycle really means, and all these different factors that impact what the price of a commodity or a futures contract or a stock or a crypto, what they really are. And these are our key events for the week. We need to make sure that we're dialed in and we understand what we're looking at today. S&P Global PMIs dropped today. We may talk about that briefly. I could touch on that. That was really our key event today. It's not a huge market mover, but right now it is helping a little bit of the rally, which we're up above 500 points now on the Dow. But CB consumer confidence, that's the big one for tomorrow. Right now we're all thinking recession. The question is what would consumer confidence do to a recession? Remember, when consumer confidence drops, the odds of our recession goes up, because when people don't feel well, they don't spend their money. And when you don't spend, then your productivity drops, production drops to meet the lessened demand. So there's a lot going on with tomorrow's number. Typically, I wouldn't think that CB consumer confidence would be a huge market mover. But right now, everybody's really waiting for that recession to develop and kick in, and consumer confidence is a leading indicator of that. Wednesday, we got EIA crude oil stocks report. That's a big day for WTI, just because we want to start to see if those builds are there in the futures market, or in our U.S. supply. We want to see if those builds are there. If we're starting to see Trump energy, the policy, getting the drill, baby, drill, is it beginning to work? We need to start seeing that. It needs to start happening relatively soon. We're in March. We're talking about 60 days in office, 50 days in office. By the end of that first 100 days, we need to start seeing some real gains in the energy, or else there's going to be questions on whether U.S. energy can get back online this year. That's big. These weekly EIA reports are going to become more and more important, because we need to start seeing more and more oil hitting stockpiles. That's the bottom line. Thursday, U.S. GDP. It's not going to be a big market mover. It's Q4 revised numbers. I'm not really even thinking about trading that. Probably won't. Jobless claims. The weekly jobless claims are probably going to be a bigger deal, just because everybody's sort of on the fence about what they think about job creation and recession. Friday's the PCE price index. Everybody loves PCE. It's a big market mover. No, it's not. We're going to wait and see. If it comes in hugely out of whack with the other inflation metrics, then we'll start talking about getting a trend day up or down. But right now, I'm not too blown away by PC. I think more than likely it's going to be a dud or a nothing burger. Let's see. Mark Corp, good to see you, Mark. Welcome. Good morning. Good evening, good day, wherever you may be. So that's exactly what we're looking at this week. Now, as far as our fundamental of the day, the PMIs, the S&P Global PMIs, what are they? The Manufacturing Purchasers Manager Index measures the activity of purchasing managers in the manufacturing. All right, so this is manufacturing. The numbers that dropped today are in manufacturing. That means as they tick higher, that suggests that production's growing, and we may, in fact, be maybe not going into a recession, whereas if they are contracting, it suggests that a recession may be around. And people are starting to watch these numbers. I call them academic numbers. I don't believe they mean a damn thing, but the markets are starting to watch them because everybody's scared of a recession. And I mean everybody. So what do we have here today? You can see the S&P Global Manufacturing came in at 49.8. That's beneath 50. That's a bearish indication. That means that manufacturing sector is contracting, according to the geniuses, the brilliance over at the S&P Global. I don't know. I don't even know who works there. If you're watching this and you work for the S&P Global, go to How to Trade. Send me a private message and tell me what you do there. I'm curious. Let's have a little Doge. Let's have a little Doge audit right here. What would you guys say you do over there besides spit out numbers every month? I'm just curious. I'm not being a wise ankle. I just don't know what you guys do. 49.8 is the number. That's a contraction. That signals economic contraction. But the services sector, pretty good news, 54.3. That's above 50. Theoretically, that's a bullish type of a scenario for the manufacturer, the services PMI, services sector, and that's above expectations. Manufacturing is what we're watching for, though. That's a bad number. It's not good. That signals contraction. As you can see, it's not doing anything to the markets right now. I mean, nothing. We're just rocking and rolling there in the U.S. 30. In any case, the S&P Global U.S. Composite PMI, that's the composite number, rose to 53.5 in March from February's 10-month low. So it is rebounding a little bit. The composite, that's going to be a mix of what? The manufacturing and the services. That's the aggregate figure. We got a bit of a rise there. But what does it mean to us? Not much. There's your rally right there. Bang, bang. So manufacturing's down, services up, and the composite number is actually improved well over where it was in February. So you could say it's a bullish market driver. You could say it's a bearish market driver. I don't really know. But it's important to start understanding that these numbers can influence price action because everybody wants to know, are we going into a recession? Okay, one of the biggest things on the market over the past, I don't know, probably since Elon Musk bought X. Be sure to follow us on X, How to Trade on X, or you can follow me, Shane V_trader on X. But since Musk bought X and became a player in the global media complex, Tesla's been under fire. And I'm sure if you're in the United States, you see it. I mean, you're getting Tesla dealerships are being firebomb Molotov'd. The Teslas are being keyed all over the place. A lot of vandalism. And a lot of it's because of Musk's role in the government, running DOGE, the Department of Government Efficiency. Essentially what DOGE is doing is they're auditing the federal government. And politicians don't like to be audited. They like to get the tax dollars. I'm doing my taxes right now because it's tax season here, so I'm not in a very good mood. It just puts me in a bad mood every single year. But what you're seeing is a real kickback against Tesla stock, and it's political. I mean, this is an activist type of an investment. Activist investors take stands against causes they don't like, and you can see there's a lot of shorting going on in Tesla. There's a lot of institutional selling going on in Tesla for people that disagree with Musk and what exactly he's doing with the DOGE, with the Department of Government Efficiency. Now, I'm not going to get political. I don't really, whatever. I think the U.S. government needed to be audited, and they probably should audit, because I know when they audit individual citizens, everybody just says, oh, well, you need to pay your fair share. Well, maybe the government should stop wasting trillions of dollars. How about that? So I don't really have a problem with DOGE, but if you do have a problem with DOGE, I get it. I know some folks that their jobs are in jeopardy right now because they're downsizing a lot of these agencies, at least temporarily, and I feel for them. I've been there. 2011 was not much fun for me, so I've been there. If you're going through that, I get it, believe me. But from a trading perspective, is Tesla a bargain? I mean, I was waiting, to be honest with you. I wanted to see a shot down at 200. I wanted to see a shot maybe down at 180, somewhere down in there where we could really talk about getting after it. But I got this 920 up here, and it goes to a question that I was given over the weekend that was, Shane, can you use the 920 on a daily? I would say, yeah, for stocks. Oh, yeah. So you had a nice big jump today in Tesla. You can see you're up probably, what are you, up almost 10%. And what that could force, that could force right there would be your 9 to cross your 20 potentially in the coming days and give you a trade. Now, this is risky because this is politically heated, but your stop loss would probably be under here somewhere at 212. And if in fact you could get a bid, maybe a bid right around current levels, 272, maybe 275, that's going to lock you in for about $60 a share. So if you were going to do that just as a trade, you're going to need to see this thing test market structure, maybe back up here at 360. something like that. Now, a lot of folks, say, geez, Shane, you're going to buy 270s and wait for 360s. I'd say, yeah, probably. That'll be a 1.5 to 1 payoff on a pretty darn good company that's going to be positioned fairly well moving into the future. It just really depends on how long you want to hold it. Is it the best buy out there? No, but it would be a technical trade. It would be a technical trade. So what we could say is, is it there yet? No, but later this week it probably will be. So we got to watch this Tesla stock relatively closely. I think you could get maybe a legitimate buy on that. Maybe, maybe not. We'll just wait and see. Back to our orb, US 30 orb. Okay, it looks like we are going to get an opportunity to buy this thing, and that's fantastic. That's cool by me. I think that we're going to be in decent shape there. Let's get back to our US oil. Yeah, we're pretty good at oil trading, guys. I'm not going to be cocky or wag my finger or anything, but we're pretty damn good at oil trading. So I'm going to go ahead and close that out. We probably should have closed out way down here. You heard me. I mean, we were looking for about 68.50. That's a beautiful trade. That low right there on heavy volume was about 68.45. It was just an absolute brilliant sell from right up there, right in front of 69. Now, do I think that 69 is the top of this market? 68.96. Do I believe it's the top today? Not necessarily. We could go higher. Something clearly just happened. We got a tremendous volume spike. So my guess is there's something coming across the news wires that has something to do with oil. So it's an interesting situation because you have such a key, huge technical level involved. 38%. That's a tough one not to take. I mean, you step up and you pull the trigger on that and you don't hesitate. However, what does have me worried about holding a short, especially after we already nailed it Friday, that right there, that's a quick payoff, guys. I mean, you're low down there, 68.45. What did we sell? We sold 68.96s. That's 50 points. That's 50. That's 50 cents. That's 50 points in roughly 15 minutes. I mean, that's tough to turn down. Now, what has me worried about this crude oil is what can actually happen here in the futures market. Now, remember, the U.S. oil market is always going to mirror and track the front month futures contract. It's going to track it. So right now, your U.S. oil is trading 68.68, and you've got WTI crudes at 68.73. So we're tracking that price action. And remember, what has me concerned about this a little bit is this right here. And we just showed it to you, but I got to show it to you again. The price action's a little bit different. All right, let's go back to our weekly chart. Because that U.S. oil contract, the price points that made the spike right here that we were basing that 69 sell off of, that spike didn't develop in this futures contract. It didn't develop. It never traded above the previous week's high. That's very important because that changes your Fibonacci sequence. So right here, if you're taking a look at something like this wave, 76.55, your key number is going to be up around 69.34. I could see us easily trading up to 69.25 today. And that would mean U.S. oil breaks above that key level. In my humble opinion, we've already nailed that thing twice. If you didn't get any of that money, that's fine. Just wait for another level to come into play. But for me, I would be the next time up, more than likely, you're going to break through 69. And if that does happen, then you're probably going to rally up to 69.50 or something like that. Hey, me, awesome oil trade. Yeah, that was a pretty good one. That wasn't bad, was it? In any case, right there, if these levels came into play every day, we would just sit here and just break in money every day. The problem is they don't. You got to be patient and you got to diversify your holdings and really be able to trade several markets. And you guys will get there. You'll get there. All right, let's go NQ. Remember, we just did rollover. Now, all of these strategies, not strategies necessarily, but these futures contracts, index futures contracts, these all rolled over to the June contract, which is huge. Remember, they're quarterly. So when you roll to June, the next time we roll over is going to be September. We'll roll in June to September. So we're going to be trading this contract for the next couple of months. E-mini NASDAQ 100 right now. You can see this is our 9 EMA strategy. We haven't got a signal yet today. Now, you'd say, okay, Shane, what do you mean? Well, I'm using RSI here. I'm using RSI really to get in on the action, and I want to see exactly what happens here. We were in oversold territory. That was before the session, and then the session started, so you could have got a quick scalp there. I don't advise that at all. I would wait during the session. So right now, what we're looking for is the NASDAQ to trend a little bit higher on this 5-minute chart, get our RSI into overbought territory, and then we'll look to sell when, in fact, we do get a retracement beneath that 9 EMA. So we're looking at that right there, and this is our coded product that we did on our Grok 3 video. Okay, US 30, is it time to buy? Yep, there it is. There's the buy. Let's go to our trading panel, paper trading, and send them. Let's go ahead and buy. Once again, these are demo dollars. We're not going to get too caught up in leverage and dialing it in. Just remember, these trades, 1 to 3% of your bank accounts or your risk capital is what I recommend. However, I've adjusted that because, full disclosure, I'm looking to trade 5 to 7% on a given trade. If you're good enough and you know what you're doing, you can get away with that. But I got to tell you, if you go anything above 7%, you're really asking for trouble because you'll get 2 or 3 losers in a row, and it won't be a good thing. Okay, so what did we just do? We just executed our orb. Where was our buy at? Got filled up right there. That would have been on that bar close. You got that bar close right outside of your orb. Now, this is a 15-minute chart. So if we're going to go with a hyper tight scalp, we have a couple of options. Number one, we could place a scalp, which means our stop loss is going to be right beneath our trigger bar. Looks like we're probably going to get stopped out on that. But it's a very tight trade. So if, in fact, we were going to play this tight, then we only have got to get, something maybe right up in here to make this thing worth our while, maybe 74. Now, personally, I don't think that gives you much of a chance to do anything. I really don't. So you've got the orb, you've got the breakout above your first 30 minutes of trade. You're looking to trend higher. Are you going to get it, or are you going to get caught up and chopped out in a reversal? If I was doing this, I would let this thing simmer, something like this, more than likely. So you already would have got stopped out on that real tight scalp. So you got to use your head a little bit. Now, as far as do we sit on this all day long, I probably would give this a little bit of time to develop to the top side. Right now it's retracing. It's blowing up in our face. There's other things that I'm thinking about doing with an orb, maybe making another orb video that sort of plays into what I like to do. But you've got the 920. The 920 definitely shows that we're trending to the top side. Do we get is it always best to buy this up in here on this breakout? Or should we wait? Should we wait for a pullback, maybe down to our moving average and a retracement level? Clearly, this is going to be a better entry. No question about it. But it doesn't necessarily mean that's the best way to trade. That might be something we do where we use Fibonacci's with the orb. We did something real similar with the 9 EMA as well. So if, in fact, you're in this trade, you can see exactly what just happened. What happened? You got stopped. If you were playing ultra tight up here, what happened? You just got stopped out by a few ticks, and now the market's sort of either loading up for another shot to the north, or it's getting ready to sell back off and maybe reverse. I would be interested. There's lots of places you could put your stop loss. You could put it beneath the 9. You could put it beneath the 20 right here, or you could put it beneath the range. Typically, I give you 2 options in the video. One of them was beneath the trigger bar itself, very, very tight, and the other one was beneath the range. I'm going to go ahead and let this one roll and see if we get this market to tick a little bit higher. We are trading with the trend right now. Is our entry point great? We definitely bought near the top of the market today, no question about it. But remember, that's what the orb's all about. The orb's all about getting in on a move before it breaks, and that's what makes it what I won't say risky. I won't say risky because if you dial in your risk management, you're going to be in great shape. But it definitely is it'll test you a little bit. There for sure. Let me see. There was a gap up opening in the Dow Jones. It might go fill that gap. Yeah, you definitely could be correct on this. Down in here, I don't believe that constitutes a gap because we just traded it. We just traded right in there, 20th. So that would have been Thursday. So that's only a couple days. I don't think that's a true gap in my book. But I see what you're saying. Get a retracement back down to that zone. Yeah, it could happen. It definitely could happen. I personally, I would have liked to have traded this orb, this 15-minute orb, on a crossover. I would have loved to have seen this crossover so we could sell and maybe take a shot at that gap. Remember, our orb key levels are absolutely important, and we were sort of trading at the daily high, something like that. And realistically, we would be looking to trade maybe back up towards early month highs, early month levels here to get us into a decent profitable trade. So it's not like we've got a real clear-cut orb here. That being said, we are trading with the pressure, and I'm relatively confident that we do spin a little bit higher from here. I'm just not really sure how high we go. If I was doing it, you probably are going to be well served to let this set up for another 15 to 30 and then maybe just look to take a shot at 75, something like that. But if you wanted just to let this thing roll the rest of the day, you could. There's just the real question is how high do we spin? I don't know. And the other thing to do, remember, that's a 15-minute orb, 30-minute orb. If, in fact, we were in a 30-minute orb, it would look something like this, which I have a lot more confidence in. I really do. You would have been looking at, you wouldn't be in the trade yet, but definitely an interesting type of a setup. So let's go back down. Let's retrace here a 15-minute orb. I want to get that set and leave it set. And where are we? Well, we're right around break even. So once again, if you're a short term, really a tight scalper there on that orb, you got stopped and now the market's grinding higher. Something to think about there. All right, guys, I'm going to go ahead and sign off here. We've gone on long enough this morning on a Monday. So that's what we're looking at. A couple of pretty darn good trades. Fantastic oil trade. That one's, once again, though, it's back up around 68, 68.90. It's going to challenge 69 again and take it out. Gold, we got a key level for you on the gold. Keep a close eye on gold this week. Very important, that trade idea. Go back and reference that. That's going to be a big-time zone. And also we're watching Tesla. Tesla with the big move. We'll have a trade idea out for you later on today. It may just be a recap of this orb trade. I'm not necessarily certain. We got to see if we can find some key levels, maybe on a major or something. But that's sort of the week ahead. We'll be back for you on Wednesday. We're going to go ahead and go with this 3 live streams a week for the time being, and then we'll probably be kicking that back in gear. We've just got some other projects that we need to, or that I need to attend to for the next week or so. But we'll probably get back to the everyday stuff relatively soon. All right, everybody, that's a wrap. That's all for me. You have a fantastic trading session. Trade the action well. And look at our orb. Look at our orb starting to take off a little bit. Yeah, we'll see what happens. Trade the action well, and we'll talk soon. See you.